Hello everyone, and welcome back to another market review. This is Silent. Today we're looking at the NASDAQ December contract for 2025. This is Thursday's market review. Starting off with the weekly chart, you can see that I've added the previous 2 weeks of constant encroachment. So we were looking at this one yesterday, we failed to reach it today on the rally, and then I also added the constant encroachment from 2 weeks ago. So I'm looking at the wick high from both of these candles. This candle is what I'm going to be looking at tomorrow if we continue this sell-off that we're getting after rejecting the opening price of the new week opening gap. Alright, dropping down to the daily chart, I've moved the wick constant encroachment measurement from 2 days ago to today's candle. So going into tomorrow, if we can stay below the 25.058 level, I'm going to be staying bearish. In the past 2 days, we're looking for consolidation / bearishness, so I'm willing to see a drawdown lower into the weekly open if we can stay below that daily wick range. We can see a rally, so we're going to open up down here. We can see a rally and test all of these wicks in here, but as you'll see on lower time frames, I'm thinking that we've put in a bearish 3 drives pattern, and I want to see price attempt to not even dig up into this range. I'd rather stay heavy and fill in this wick and start delivering below the longest wick of the week, which is the 588 level, and I'll be attacking the weekly open as far as Friday's low from last week. On the 4-hour chart, you can see how we completely fill in the daily SIBI from this large down move on Friday with the bearish 3 drives here. So we take liquidity twice, and then a third time we finally get a strong reversal with a fair value gap. After this purge on liquidity here, there was no fair value gap created, just a long wick, and we filled in that wick with this delivery today, and we've closed below the constant encroachment of that wick, at least by eyeballing it. On the open, I would like to stay inside of the 4-hour SIBI or remain heavy. On the open here, I'll be utilizing this 4-hour SIBI as a limiter on my expectations for upside. I really would prefer if we can keep candle bodies below this constant encroachment range and stay inside that daily buy-side imbalance for an upside objective before rolling lower, and draw down through that large daily SIBI shaded in purple, attack the daily wick constant encroachment, and start to fill in that daily buy-side imbalance with the green lines. So we're moving from premium daily buy-side imbalance down to a discount imbalance, and I'm keeping this purple shaded area in here because it kind of acts as a more discount range. It's more in the middle of what we are referencing, and it is still clearly being referenced on the 4-hour chart as seen on the 14th price action. We're closing in this line segment of imbalance with candle bodies here, and there's only wicks down in this range besides the close on Friday and the open, which I'm expecting this to be drawn down into and be filled in a little bit heavier. On the hourly chart, I've just added our midnight opening price on each day of the week. The daily buy-side imbalance overlaps with the midnight opening price from today and on Tuesday here. This is Monday's price action. So we gap up throughout Sunday, close above this up close candle, and consolidate on either side of this range here, which is equilibrium, and we're starting to head back down through equilibrium, and I'm wanting to target this discount range in here, which is right about the midpoint of our new week opening gap. I'm wanting to see price place candle bodies down below the sell side liquidity here. On the 15-minute time frame, you can see how we have been predicting our consolidation so far this week. It's been a large consolidation, but we're not really trending anywhere, and we can see how the Asia range has been in a relatively tight range. So we're opening and closing our Asia range and nearly overlapping them each day here. So in my eyes, that cooks up consolidation scenarios before the day even starts at midnight. So going into today, we're expecting consolidation or downside, and we open and place our Asia range in the same area as Tuesday's Asia range, and price starts to grind up after we open at midnight. We rally up above the October 6th new week opening gap and stay above it until New York, where we do a reversal here and color outside the lines of that Friday SIBI that we were watching and take out Wednesday's high. In the same move, we revisit previous Tuesday new day opening gap. If you extend this range to today, you'll see that the candles stop right at that level. We'd hit this reversal here after doing a wicked manipulation move right on the open. We start to close below Friday's SIBI and nearly do a immediate rebalance here. We start to close lower below our most recent swing low, which breaks structure to the downside, and we cascade heavily lower going into lunch, and price retraces from the Wednesday new day opening gap and hits the low of the Asia range from today and fills in this sell side balance here. It's not shaded at all, but it's about equilibrium from the Friday SIBI and this Tuesday buy side balance that we were watching yesterday. In the execution video, you'll see how we took a short after getting stopped out on this run and pretty much caught the whole move and targeted that same low we were watching for the past 2 days. Price has a strong drop into that level and consolidates going into the end of the day. I'm wanting to see us consolidate in this range, potentially draw up higher, touch that 4-hour sell side imbalance, and then start to roll lower. So I'm wanting to see the large green area down here be filled in with price action going into Friday. We're doing the 5-minute chart a little bit different here. I've added the news as usual, but I've taken off the higher time frame price levels that I look at from the daily and 4-hour and just focused on the 15-minute ranges, while also keeping our higher time frame liquidity levels. So we swipe Wednesday's high after consolidating in Asia and drawing up to take out that high. We consolidate all throughout the open of New York, and then going into 10:30 we hit a rally and break below the most recent buy side balance. If you extend this at a time, you can see that buy side balance start to be respected as a premium array and becomes an inversion level. We also are knocking at the top of that Friday sell side imbalance from the 15-minute chart, and we began selling off with strength here. I was watching this imbalance here from around 8 o'clock on the 5-minute chart. I extended that out in time and was watching it during the open and was trying to utilize it as an origin for fair value gap, but I got caught off guard with the manipulation here, and I waited until price got back below that range to begin building in a short position. We utilize this up close candle here as a propulsion candle because all of this up close range here is order block on higher time frames, and we also have an idea of a breaker happening in this area. I'm utilizing this down close range with the fair value gap instead of anything in here because it's a cleaner breaker to me, and we're just cutting out all of the consolidation before the manipulation happens. And so we're cutting right back to the chase whenever price gets back in line after the manipulation. And so if you take your chart and cut out this segment in price and just connect the up range here to here, this segment in price is time distortion. So we're ignoring really anything in here. It's not really that useful. So at this point here, price begins time distortion, and all the way until basically this range, you can cut out that in your mind, and you can see how we drop down. This would be a clean classic breaker without all this price action here. So we cut it out and price drops down, rallies up and takes out Wednesday's high in our mind with the remaining portion here, and breaks back below these down close candles. And we place an up close range right inside that sell side balance here. So this is a reclaimed fair value gap. It's unfortunate that I didn't include it shaded on this chart, but you can just bear with me and imagine it there or draw it on your own chart. This up close candle is signaling that we are about to drop fast. It's a timing tool. We begin selling off with strength here. We do an institutional overflow entry drill here above this up close candle before the sell-off, and we do the same thing on this up close candle here, just a wick inside that range. As we drop below the new week opening gap from October 6th, we begin utilizing the up close candle here as a bearish order block. Price consolidates in that range and then breaks lower and sells off with some strength. Bounces off the new day opening gap from Wednesday and has a retracement going into the open of the afternoon, and we create a sell model in this price range on lower time frames. We drop lower. This is our last up close candle before the big sell-off, so this is our fractal idea propulsion candle. So we're doing the same idea of price action here, just here in the afternoon, and that brings us into our Wednesday low. So whether we come up and purge this, buy some liquidity, and then start to move lower is dependent on whether we are going to go ahead and be heavily bearish this week. I'm fine with selling in this range and just being inside of the previous 2 days ranges. So I'm not really expecting anything too heavily, but if it's going to happen tomorrow, then we have everything set up for that. So tomorrow I'll be expecting, again, more downside or consolidation. I'm not really seeing any upside without a full-blown reversal, especially after the action that we've seen today. And so dropping down on the 1 minute time frame, we can see a closer look. I've added our opening range imbalance from the AM and the PM session. You can see how price consolidated inside of the lower portion of that first presentation array, and as we rallied up into it, I was utilizing this as a short, but we failed to do that and rallied up one more time, took out the highs. We started to do a more substantial reversal after the manipulation here, and we start to break down. We leave this imbalance open and start to drop. We reference this fair value up here as a selling opportunity, and price consolidates at the high end of the opening range imbalance here. It's kind of mirroring this here, but it's signaling bearish because we're displacing into it. So we cascade lower and drop below this low and do a strong displacement on the higher time frames with the shift. That's that retracement on the 5 minute chart. We are referencing the low of the opening range imbalance on this move up, and it drops lower, and we consolidate at the low end of that old new week opening gap before cascading lower, and it builds in a low here before retracing higher and putting in a consolidation throughout the lunch period. By the time we open for the afternoon, we shift lower and leave this imbalance open. So I'll be looking to utilize this as a draw on liquidity for the morning session potentially, and utilizing this as a capping kind of marker for tomorrow. And certainly I wouldn't want price to go above the AM session one. So we drop lower into Wednesday's low and consolidate going into the end of the day, kind of not really going anywhere, just pinging around the old new day opening gap levels and new week opening gap levels before closing. Alright guys, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, let me know in the comments. And as always, like and subscribe. I'll see you all tomorrow.